Hello traders, welcome to the channel again. André Cardoso here. Thank you for being here again. And I will cover some stocks for you, and some of them with very interesting patterns, let's say. And let's start with the Cisco. So I have a list of a few of them to share. I'm not sure if I will share all of them, but I make my best to try to cover all of them because they have all something interesting to say. So let's start with the Cisco. I will keep my time frame between the weekly and the daily time frames. We will pay attention to the weekly, daily moving averages and daily moving averages, 200 daily moving average and weekly moving average. And as we can see for the Cisco, and let me push also, I need another indicator here, I need this one. We have these previous structure highs at $50, so we have the previous structure fractal resistance right there. And we're still threatening this previous structure resistance. So this is also the previous structure support level for the heads and shoulders formation. So we're still rejecting this previous structure support, turned it into a resistance. So we're still threatening that level now with another element, and again with another element, because the first one we have there, the 200 moving average also. We're still threatening also the 200 moving average. So I will not be surprised to see the Cisco trading inside kind of a range, trying to in a sideways moving process. If you wish, you can identify a range for now, define it between the recent highs and the recent lows. So I will not be surprised to see Cisco spending some time inside the range. If that happens, that may open the possibility, or that may increase the possibility for more downside momentum, even though this may act also as a potential inverted heads and shoulders. Note that we are on a weekly time frame, and we are talking about an inverted head and shoulders after a fall almost of a 40%. So if you take a look at the long-term trend, so probably you are not paying attention to the eventual inverted head and shoulders as a trend continuation event. Okay, of course, as a weekly, since we are seeing a weekly chart, so after a 40% of a drop, I will not be surprised to see that type of pattern being formed as a potential reversal behavior. So in that being said, I will not be surprised to see a period of a correction after a move to the upside. I will not be surprised to see a correction, and we can use also the Fibonacci levels to try to identify the best, or to try to identify which level the price will find support for the right shoulder, not support to push the trade, but we can try to identify the price zone or a Fibonacci level where we think the market may find support to create that right shoulder. So, and if that happens, we will see something like the left shoulder, the head, the neck zone, reinforce it again, the right shoulder, and then trigger with a breakout of the neck. So we will pay attention to the $50 price zone, or the previous structure fractal resistance, because a breakout above that fractal may increase with the probabilities for a move to the upside. So in terms of projections for that pattern, I need to push my extension level and try to identify the lower close of the head, the previous close of the neck zone, and project the 200 Fibonacci extension. So as you can see, we have a convergence between the golden Fibonacci extension projected at 57 with the 200% Fibonacci extension, which means a move above this resistance, which will trigger the pattern could put the price trading at this zone. So which means we will be facing the pattern that I shared before, if that happens, which is the bearish shark pattern at the 57, at the golden Fibonacci extension level. We still misses some time. It will be needed. Sometime it will be needed to form this pattern. Sorry. But if that happens, of course, we already know what to do. So we expect a reaction, a retracement if that happens. Note that, as I said multiple times before, for the shark pattern can also be pushed to the 224% Fibonacci extension without a reaction at the golden Fib. Sometimes the market, and a lot of times the market, will react on both of these levels. After the completion of the pattern, okay, we expect a reaction to the downside, but then the market can print that pattern again later at the 224, and then if that happens, we will expect another pullback, another retracement, okay? But for now, we are focused on the potential violation of this previous structure resistance, which may trigger the move to the upside. The shark pattern may also trigger a retracement, as you already know, or some of you already know. And that pattern, if completed, should target the 50% Fibonacci retracement level. Let me just adjust this one. So if that pattern completes, we will target the 50% Fib, which means we will target the current price zone again. And it may converge with a revisit to the 200 moving average. Okay, it may suggest. Of course, that will depend how much time the price will need to complete the pattern. But admit a situation where the next sessions and the next couple of weeks, the market breaks above and trades directly to the 200% Fibonacci extension. Then we will expect something like a retracement back to the 200 moving average, or possible move to the downside. Of course, just to complete the sequence, if the price completes the pattern, and this is pure speculation, of course, as some of you already know, if the price completes the bearish shark pattern and then starts to fall, this sequence will complete the bullish 5-0 at the 50% Fibonacci retracement level. Okay, so pay attention to this sequence. Breakout above the next zone, confirming a potential false breakout below, confirming also the eventual edge and shoulders formation, and we need to see a kind of a deeper pullback to form that right shoulder. If followed by a breakout above, okay, that will confirm that pattern, that specific pattern, and then we will pay attention to the default target zone for the edge and shoulders and the extension to the golden Fibonacci of this last swing low. That completes the shark pattern, which should target the 50% retracement, completing the bullish 5-0 sequence, which may provide you another opportunity to go to the upside. Okay, so this is the bearish shark pattern right there. It may offer a nice opportunity to go short, because we don't know if the price will find support here. Okay, the price can fall and print new lower lows. We don't know if that will happen. We expect at least a 50% retracement. That completes the 5-0 sequence, but we don't know if that sequence will happen. Actually, we don't know even if the shark pattern will complete above. This is pure speculation, but just preparing for the next weeks ahead on Cisco. So we prepared for the eventual breakout above this $50 level, because it's important. As you can see, even if the price completes the shark pattern, this price zone will be important then later to define the direction, or a bounce and potential more upside, or a break below and eventual retest of the lows and more downside momentum. Okay, so this will be important to follow. Now let's move forward. It will need some time to develop, and I will be here updating charts. So the Disney, nice channel to the downside. We are now threatening the resistance of this channel. I projected before a bullish crab pattern at 67, 64. We have the previous structural lows at 90.30, and we have actually 90.23. And of course, only a clear violation of this previous fractal resistance will confirm the false breakout below this structure, so which we are now facing. So we are seeing the price starting to bounce. A clear violation of this trend line or this descending channel may offer upside momentum for the stock. Probably targeting the previous structural lows. We can also use a retracement from these lows, just in case the market starts to bounce towards those levels. So we have the 38% Fibonacci right there at 129.48. So I will not be surprised to see Disney starting to recover without breaking these previous structural lows from 2020. So take that into consideration. A breakout of these lows that may force the price to sink even deeper. But pay attention, because when I say a clear violation of these lows, it's because I need to see the price breaking these lows and staying below. Okay, I can see the formation of this crab pattern and the immediate reaction as we expect after the formation of the pattern, rejecting or recovering this previous fractal support. The idea of this bullish crab pattern is exactly that. We see the breakout of the previous lows, the price forms the pattern, starts to bounce, hunting all those stops positioned below, okay, and then starts to trade higher. Of course, we trade based on specific expectations. We don't trade based on false targets, you know. We trade based on specific targets. But this is just one of the possibilities. For now, we stay above this previous structure fractal, and of course, if the price can't find support here, this probably will force more downside momentum for the stock. But I'm paying attention to these previous structure fractal supports and the eventual formation of this crab pattern. Of course, a breakout above, as I was saying, a breakout above this channel may also trigger some momentum. We have the 200 moving average pointing to 137.83, so that will not be a surprise. Trying to hunt all those shorts, those stops positioned for those who shorted the market. So those stops positioned right here, with the bounce from these lows towards those Fibonacci levels, will not be a surprise. Trying to hunt those stops positioned above, and paying a visit to the 200 moving average, approaching from above and pointing at this pointing today to 137.83. So pay attention to the potential recovery on Walt Disney, or the eventual formation of this bullish crab pattern below, which may act as a false break of the previous fractal. eBay, also interesting to follow, 50.82. So this is my let's say my main level to pay attention to. So a breakout above 50.82 should trigger more upside momentum. As we can see, we have already support at the golden Fibonacci. So we have these potential inverted heads and shoulders. Also, we have targets for that head and shoulder at 62. So pay attention for eBay, because the clear violation of these levels should trigger a momentum to the upside. This will converge, or this will put the price very close to the golden Fibonacci level right there, but I will not be surprised to see a full attempt to recover to the previous structure highs, 81.19. Of course, I have already a potential crab pattern, a minor or a lower degree crab pattern projected a few points below the 62. So this may also happen. The price will not go in a direct line to the previous highs. So we should expect at some point the pullback. And based on the default projections for the default target for the edge and shoulders and the golden Fibonacci extension of this last swing low, we can project kind of a box or a cluster right here, and expect something like a pullback or a retracement if or after reaching this price cluster box, and that's eBay. Of course, all that will be invalidated with the breakout below the previous low. So if the price keeps trading lower, of course those patterns will vanish, and we'll need to adapt to the new price structure. Let's go to Ford. Also rejecting a trend line resistance. As we can see, we are in this session today, we are rejecting kind of a you can say kind of a trend line resistance covering the previous highs. I will not be surprised to see a breakout below the previous structure support, and based on the Fibonacci ratios that we have, I will point to the golden Fibonacci extension, the completion point of the bullish crab pattern, in convergence with the 88.6% Fibonacci extension retracement level. So basically we are searching for multiple patterns here between this range. I will point to 6.5, 6.46. So this is where the bullish bat pattern will complete for Ford. FedEx already completed the golden Fibonacci extension. Right there, convergence with the 200% Fibonacci extension, default target for this edge and shoulders printed above. So I admit at least a retest of this channel resistance. A breakout above this channel may trigger more momentum to the upside. We can see clear divergence between the recent lows, or the previous ones and the recent ones, which guides me into a specific A, B, C correction with divergence between both of the bottoms, and of course above 248. This means we are going up for FedEx. So that bullish crab pattern as an example, because it's already completed and it's already trading at the target zone. As we can see, we are now facing the previous structure support, and nothing assures this price zone will not act as resistance. Pay attention to this possibility. Previous structure support, it's now resistance. We have the 200 moving average also pointing to 107.96. An eventual retest of the channel will not be a surprise. Goldfields, nice chart here, at least in my opinion. A few things that I want to share with you. Actually, let's keep this on a weekly. Note that we are approaching overbought conditions, which is not a sign the market needs to pull back, or it's not granted at least, but it's a sign that of exhaustion. So the price is approaching the overbought conditions, and also we have kind of a bearish shark pattern at 224% Fibonacci extension right above the golden Fib. So we have kind of a cluster box between those Fibonacci levels. I'm pointing to 1340, 1360. So this is the 224% Fibonacci extension. This may also help in the formation of a major or a higher degree edge and shoulders. Of course, that pattern will only be confirmed with a clear violation of the previous structure support. Only a clear violation of these lows will confirm that edge and shoulders, and that will depend how the market will approach the previous structure support again, the next zone. But this bearish shark pattern And of course, the market is well bid, as you can see, very strong moves, and keeps trading higher, filling all those previous small gaps above, and keeps trading higher. Actually, we have a new higher high in this session today, printing a new weekly higher high, as you can see. So a clear approach, one approach to this to the 224% Fibonacci extension may produce a retracement. So I will not be surprised to see the 50% the 50% retracement of the pattern, which means the price may trade back to 1168 after the formation of the pattern, of course. Another possibility is a direct shot to the previous highs and a direct retest to the previous structure highs. And even if the market decides to complete this sequence for the shark pattern, I will not be surprised to see later the formation of this potential cup. Okay, so pay attention to this. Of course, a clear violation of these previous structural lows should trigger a deeper pullback for Goldfield, because there's an heads and shoulders formation pointing to the downside. But as I said, we still need the right shoulder, an approach to the next zone, and a violation of this next zone. So for now, let's pay attention to the potential. Let me tag this shark pattern, 1355. So we're still paying attention to this possibility, a potential shark pattern at 1355, which may help the formation of this right shoulder, of course, and then it may act as a trigger for more downside. Glencore, well bidded also. We need to go, we are on a weekly time frame chart. We can see, if you draw a trend line between these highs, we can see we stay above. I will say that a clear violation of $14 will trigger a move to the golden Fibonacci extension, projected above 1691. So this is the default projection for the crab pattern, and some of you start to be familiar with. After the formation of that pattern, we expect a retracement to the 38% Fibonacci level. And which means the formation of this crab pattern will suggest a retest of a broken resistance now under pressure, or let's say we are approaching again that level. So pay attention to this crab pattern projected above. Actually, pay attention to the breakout above the fractal, which may offer momentum to the upside, and then later pay attention to this eventual crab pattern at 1691, which points to retracement back to 1403, back to the previous structure resistance, and by the way, which may offer support again. GM, another one that I will not be surprised to see as or forming a cup. For that to happen, we need to see a clear violation of 4236. I have a bullish shark pattern projected at 2206, which may offer much better and friendly risk-reward approach for those who want to try the long side opportunity for General Motors. Of course, as I was saying, we have here kind of a double bottom, this last push to the lows, almost kind of a triple bottom, but let's say a trade close above 42.36 on a daily basis. We may see on a daily time frame a close above 42.36 may trigger momentum to the upside. We have targets at 52.10 for the General Motors. Let's see how it will develop. Of course, a violation of the lows will vanish with the possibilities to complete or to form those patterns below, and for that reason I'm pointing to the eventual convergence between this shark pattern, 224% Fibonacci extension of the last swing high, and the bullish crab pattern, a minor bullish crab pattern or a lower degree event, projected also at 2291, the golden Fibonacci extension of the last swing high. Let's pay attention to this. Of course, too soon to talk about this potential move to the upside, to a retest of the highs. If that happens, of course, in a decent manner, we will pay attention to the potential cup formation, the eventual pullback forming the handle, and then we will pay attention to the breakout above, which may trigger bullish momentum again. Google, very clear chart for those who trade price action and trade price structure. In my opinion, we have three clear pieces of data being delivered in packages, and we can identify those packages very well right here. So I will admit this as a potential technical double bottom. We have the previous lows, the previous close, retested at the second bottom. Of course, that pattern will only be confirmed with a clear violation of 102.25, which is this previous structure fractal resistance. So a clear violation of the fractal should trigger a move to the upside on Google. 114.11, it's a default target for the pattern, but nothing will it's not impossible to see. I'm trying to search for the best expression without being so dramatic, but I will not be surprised to see generally in the equities trying to recover and starting to trade at higher prices. In general, I'm not saying that will be the case for Google, but I can see that happen if they find support with this technical double bottom. I will not be surprised to see a retest of the previous fractals. Let's move forward. Home Depot. Let's see. We have the previous fractal at 332.98. We have this candle right there, scaring and threatening the violation of this fractal, and then rejected. But we have a new support here at 308. Eventual bullish 26.18. It's now projected at 296. So this is the golden Fibonacci extension of the last move. Okay, we have a broken neck here. The price finds resistance right above the neck zone and then starts to pull back. So if the price pulls back to the golden Fibonacci level, that will complete the bullish 26.18, which may offer a move to the upside. Usually we will target a symmetrical ABCD pattern, which by the way points to 378. So which points to the default target zone for the technical double bottom. So I'm paying attention to the potential bullish 26.18 for Home Depot, and then later I will pay attention, of course, as soon as we approach the highs I will pay attention, and based on the price action, and we need to wait for that to develop, but based on what we see at this point, I will not be surprised to see the formation of this bearish pattern at the 88.6. But for now, I'm paying attention to the eventual, first of all, the formation of the bullish 26.18 at $296, and then a clear violation of this fractal, which may trigger another swing to the upside. Now, I shared this one this week. I think I shared this on a weekly. I shared this chart before on Twitter, and as we can see, we are trading overbought. Actually, we are pulling back from this golden Fibonacci extension level. Now, this is one of the possibilities, as some of you already know. The golden Fibonacci usually as element of pressure it may help you to identify those potential reversal zones, because that's considered one of the reversal Fibonacci extension levels, the golden Fibonacci extension. This is one of the possibilities, as some of you already know. Bearish shark pattern 1724. So that pattern targets the 1456. So this pattern targets the 50% Fibonacci extension. Note that we're still trading in a sideways here. Okay, so we're still trading inside this major range, and as we can see, this midpoint of this range is acting as element of pressure, let's say, as potential support for the stock. So basically, pay attention to this. Of course, we have a trend line here covering these highs. We have a descending trend line there. We need to see a clear violation of this structure. I will point to a clear violation of this previous structure fractal resistance that may trigger more upside momentum. Until there, pay attention to these swings, because those patterns may offer small opportunities to get involved on those stocks. On those patterns specifically. This is the shark pattern. As I said, I expect at least a retracement to the 50%. We have the 200 moving average also pointing to 1389. Let's see how it will develop. So this will complete the bullish 5-0 sequence if achieved. So if the price touches the 50% Fibonacci retracement level, this sequence will be, this is the 5-0 sequence at the 50% Fibonacci retracement. If the price falls, do not be surprised to see a bounce from this price level again. Let's move to another one. I also posted this one as a potential heads and shoulders formation. We have supported 2408. I believe that a clear violation of this fractal may trigger more downside momentum. We have default targets for that heads and shoulders at 1404, a few points above this previous structure fractal support level. So I will not be surprised to see that happening. But we have also these minor, let's say a minor crab pattern projected at 1975. So that doesn't invalidate the possibility to achieve targets if the price starts to approach this level. So we may see something like a bounce after completing this bullish crab pattern. We may see something like the 38% Fibonacci retracement being hit after the formation of that pattern, but nothing assures me the price will not trade lower later. Okay, so pay attention. If the price starts to fall below this fractal support, pay attention to 1975, the golden Fibonacci extension. This is a minor or a lower degree pattern. Okay, and that being said, that may offer a bounce, but without ignoring this target zone for the head and shoulders formation. So because a clear violation of this fractal, that should trigger a search for this 200% Fibonacci extension level. Of course, this may fail. I don't have a crystal ball, and as I said multiple times, I have been wrong in the past, and I will be wrong in the future. I just don't want to stay wrong too much. That being said, I can be wrong, and a clear violation of this fractal, let's say, let me try to tag this one at 3109. So a clear violation of this fractal should trigger momentum to the upside. Of course, we have a couple of patterns taking into consideration a clear bounce from this price zone and a direct move to the highs. That may help the formation of a crab pattern above, but we are too far from that kind of a behavior. We need to observe how the market will behave. If starts to bounce, in which conditions the market will create that bounce. That being said, I'm paying attention to a violation of these laws and the potential formation of the crab and a default target for the heads and shoulders pattern printed above. Juniper, also, I also suggest, or I'm also expecting some pressure here at the golden Fibonacci extension level. Actually, the golden Fibonacci extension level 161.8, the golden 61.8% retracement, which means we are also facing a shark pattern completion point right there at the golden Fibonacci, right here. 50% Fibonacci retracement 29.59, completing the bullish 5-0 sequence. Okay, so pay attention to this price zone, which may offer again a new support. 25.18, a violation of these lows, and we will prepare an attack to the previous fractal support levels. In terms of, I don't say that I have a favorite pattern to trade, but in terms of risk-reward approach for the downside, and taking into consideration the ratios and the Fibonacci levels or the Fibonacci variables filled inside this range, inside or between the fractals, I will favor the short from 37.06 because it may offer me much better risk-reward approach if I want to short a stock, which is not usual. I always try to search for opportunities to go long with a decent stock, but sometimes I play to the downside, but kind of a scalper, and not on higher time frames, not for sure. But I will not be surprised that, as I was saying, the formation of patterns above, which may offer much better risk-reward approach for those who will try to short it. Even though I'm paying attention to potential longs once the price approaches this 50% Fibonacci level. Eventually a retest of these lows may also offer opportunities to try to go to the upside. Of course, try to protect your longs for long term, taking into consideration a weekly time frame. If you play for long term projections, of course you need to protect your trade below, with your stops below those fractals, because a clear violation of those fractals, obviously, it's a clear symptom that the market will trade much lower, and there's not so much territory below these lows to trade on Juniper, so pay attention to that. So this is a very decent price zone to search for longs, not to search for shorts, and I will try to pay attention to this price zone if achieved. And again, shorts only kind of if you want to wet your feet, trading a specific pattern, enter 37.06 and exit, kind of a fast enter and exit at 31, because you never know what will happen next. Even though I prefer to search for opportunity to try the long side of this stock, specifically this one at 29.58. So at this point I'm ignoring the possible short from this price zone, which nothing assures me the price will not trade even lower. Okay, and trying to print kind of a three major waves to the downside. That's nothing assures me that will not happen. But it's much better to try. Let's say, in my opinion, it's much better to try the long side of a stock than try to short it. It doesn't make a lot of sense to try to short a stock. Usually we try to invest on a stock, not to trade a stock. So I prefer to search for longs, even though for those who prefer or who search for a specific pattern to try to short this particular stock, I think the 37.06 may offer a decent risk reward opportunity for that trade to happen. Let's move forward to JP Morgan. A golden Fibonacci extension, some pressure right there. As you can see, a small pullback, very shy and not enough as expected for the shark pattern printed at the golden Fib. So at this point we expected something like the 50% Fibonacci retracement to 119. As you can see, the price finds support at the very first Fibonacci retracement level, 129.65, the 23.6% Fibonacci retracement level finds support there, and we have a new higher high. So I'm now pointing to the next pressure level at 152.81, and again that pattern should target the 50% Fibonacci level, another deeper pullback for the stock. If that happens, that will complete again a 5-0 sequence at the 50%, which may trigger more upside again for the stock. So we have two options here: one to try the short at 152.81, and the other one to try the long at 127, basically. Coca-Cola. Let's move to a daily. Completed at the 88.6% Fibonacci retracement, 64.15. We have a broken neck at this blue line right there. We have a broken support a few points below there. Target achieved for this double top formation. 38% Fibonacci may act as support, 60.64. So as you can see, today we are nailing this Fibonacci retracement. What we can see more is that we are approaching, actually most of you are already trading below your oversold line, which is positioned at the 30 levels. I have my lower band at 20s and my higher band at the 80s. Okay, I like to see extremely oversold or extremely overbought conditions when I trade those patterns. Of course, I search for those conditions usually on lower time frames, below the daily time frame usually. That doesn't mean the price will not bounce from this price zone, because I don't have that signal extremely oversold conditions. At this point, I will not be surprised to see this pattern acting. This may be strange for some of you, but I saw these patterns multiple times, and it's time not to ignore them. So, and this is the eventual inverted edge and shoulders. Usually we search for those events as a potential reversal patterns, kind of an edge and shoulders formation at the bottoms. We don't expect these patterns to act as trend continuations. But I admit that a clear violation, let's put things like this, I admit that a clear violation of this trend line resistance will trigger more upside momentum for the stock. And that being said, I admit that a clear violation of 64.70, that is a trigger for more upside momentum for the stock. But we also know that sometimes the trigger may act against us, which means a lot of people will try to buy the breakout of this structure. Be careful with the pullback after that happens. Let's observe how the market will break above if that happens. Don't rush. Try to wait for a retest and a move to the upside. Don't try to rush in the first move that you see to the upside, breaking the structure, because usually the market needs to retest and reject that structure again. So you'll be forced to hold your trade or eventually to exit your trade during this fall, and then to see later the market trading higher. So let's wait for that to happen. I'm pointing to this 38% Fibonacci retracement level because it's usually the Fibonacci level used for strong trends or strong momentums. If the price is decided to create a very strong momentum to the upside, breaking the structure, the 38% Fibonacci retracement will not be, it's not actually, it's not the level to ignore, you know. Even if you prefer to go and say, okay, but the 61.8 or the 78.6 offers me better risk reward opportunities to get involved, do not ignore a bounce from the 38% Fibonacci level, because if that happens, that means a strong move to the upside. And of course, we wait for the breakout of these levels to happen, and then, as I said, the market should be forced to retest those levels again, reject to recover the resistance, turn it into a support, and then we will see a move above the previous resistance. Okay, we are far away from this behavior to happen, so we need to wait. I just want to call your attention to this 38% Fibonacci retracement level, which may act as element of support also for the stock. Now, let me show you also. This is MetLife. This is a weekly time frame, and this is a bearish alt-bat pattern printed at the 113% Fibonacci extension level. As you can see, we have a few, well, the price pushed a few points above the Fibonacci level, of course, and then starts to fall. We are approaching the 38% Fibonacci level, but we are also inside what we may call an ascending wedge formation, so I will not be surprised to see a deeper pullback to the channel support, and eventually even a breakout below this trend line. So a lot of people will pay attention to the eventual support, and if the price starts to break below, a lot of people will start to short. And with the 200 moving average approaching from above, I will not be surprised to see something like a clear move below this trend line support, you know, and then trying to find support below the structure and a bounce from these lows. Far away from that to happen. We're still trading, actually the market can find support at 69.80. So this is a 38% Fibonacci retracement. As I said before, that level may act as a strong support for a strong continuation to the upside. So if that happens, that we will not ignore that momentum. But even though that ascending wedge, if reinforced at the lows, if we see the reinforcement of this ascending channel, that may offer situations to go long again, and in fact we can draw our retracement here. So as you can see, we have the 38% Fibonacci retracement, which, well, that will depend where the price will break this ascending trend line. But imagine a situation where the price breaks below this structure. We have immediately below, we have the major Fibonacci level, the major 38% Fibonacci retracement level. So a fall below this ascending wedge, which, as I was saying, may trigger a lot of short positions to the downside, may act against those shorts with the price bouncing from these levels again. So we have the 200 moving average, which may act as an element of support together with the 38% fib. So if that happens, that may offer a nice opportunity to go to the upside. Now, a clear violation of these lows, and that's one of the reasons why it's important to observe how the market will react if it approaches this price zone again, and nothing granted, as I said again multiple times, nothing is granted. I'm just speculating because I need to be prepared to what's coming, but a clear breakout above 57.41 will confirm the false breakout above. Okay, we have these recent highs threatening the breakout above the previous resistance at 73.18. the false breakout will be confirmed with a clear violation of these lows, which means we need to see a clear violation of the lows, and the price needs to remain below this price zone. If the price remains below 57.41, you should target the golden Fibonacci level. Again, the same process over and over again. Search for the golden Fibonacci of the last swing high after the false breakout. That will complete the shark pattern below. We have convergence between multiple golden fibs, as you can see, 44.93, the completion point of this shark pattern, and the major or higher degree 61 retracement between those lows and these highs. Okay, so this is a convergence or a cluster box to search for positions for the long side. If that happens, it may also be a nice opportunity there. So that's why it's important to pay attention how the market will behave once it approaches the previous fractal support, because it may be forced to print a deeper pullback. Okay, we are talking about the 38% Fibonacci level, the first important or the most important level for the Fibonacci retracement. Then you have the 50%, and then you have the golden fib. We are talking about 3 different levels the market should break with a clear violation of these lows. And that being said, I will pay attention to this eventual shark pattern projected below. Microsoft, nice channel support, nothing to say very specific. We have a nice channel, not channel support, nice descending channel. We have nice support with the 200 moving average. This is a weekly chart acting as a support. We have also the potential, let's zoom in, we have also the potential technical double bottom right here. So we admit that a clear violation of this fractal may trigger a move to the upside. Let's try to project the 200% Fibonacci level. So that pattern targets 287.63. That is equivalent to a retracement to the golden fib, to the 50% fib, something between the golden fib and the 50% Fibonacci retracement level. Let's zoom into this price zone. Of course, there's a channel, there's a descending channel, there's a resistance. The violation of this fractal will converge almost for sure with a violation of this channel to the upside. We have already the technical double bottom in place. Of course, it needs to be validated with a clear violation of these highs, as I was saying. That should trigger a move to the 200% Fibonacci extension level. Let me just measure this last swing low and search for the 227% Fibonacci extension, which means just by a few points missed right there. I will not be surprised to see a major cipher pattern for Microsoft, something like this. Okay, and that pattern points to $320. Okay, so basically we are paying attention initially to a potential breakout of the resistance. Of course, I don't need to repeat myself in this, but the clear violation of the lows will invalidate and vanish with these studies and with these patterns, of course. I would suggest paying attention to this, to the potential violation of this fractal, which may imply more momentum to the upside, and then later a potential cipher pattern projected at the 78.6% Fibonacci retracement level. Actually, let's first of all, the default target for the technical double bottom 287.63. Let's go into Nike. I shared this one before the breakout of this next zone, 118.47. So we are moving towards a 200% Fibonacci extension, I believe, based on the technical pattern. I'm not a believer based on symptoms or emotional reactions, as some of you already know. I trade based on a specific pattern. If the pattern is there, trade the pattern, not your emotional reaction. So I believe at this point, since we are trading above the neck, that we are moving towards the 200% Fibonacci extension projected at 149.30 for Nike. Of course, also the possibility that will depend how long the market will, how much time the price will need to retest the previous structure highs, but we will pay attention also to the formation of a potential cup for the Nike or for the stock, and of course at some point the market needs to pull back, and then a breakout above the channel or a breakout above the resistance should trigger the pattern also. So I need to finish, and I will finish, let me see, with just a fast approach also. Let me try to select one of these. Actually, this is a fast one. Microsoft, the Nike, we have the Nvidia. Also, we have a resistance at 188.11. So we have also Nvidia with an inverted edge and shoulders, as we can see here, clear one. Admit a move to the upside after a clear breakout of the next zone. We can project these. The targets for that pattern very fast, because I need to finish. I have a meeting in 20 minutes. So 200% Fibonacci extension, we have 266.48. So this is equivalent to a retracement from the highs to the lows. We have kind of a cluster box here between the golden Fibonacci level and the 200% Fibonacci extension. So basically we have an inverted edge and shoulders for Nvidia in play. We wait for a clear violation of the resistance, which may trigger a move to the 200% Fibonacci extension level. Oracle or Oracle, as you prefer. Golden Fibonacci extension and the 224. Both levels may exert some pressure for the stock, but again, in general, I will not be surprised with a retest of those fractals above. In general, for the equities, it will not be different for this one. So we have the golden Fibonacci right there. Let me push the prices here. 91.69, so just a few points above the recent highs. We have this golden Fibonacci extension level. A pullback from these levels will not be a surprise, and back to the 50% Fib retracement level, completing again. Always the same. It's so boring at some point that you will cancel your subscription of this channel, because it's so boring, this process. Bearish shark pattern, golden Fibonacci, retracement to the 50%, completion point of a bullish 5-0 sequence. Okay, that may trigger more momentum later. The same may happen from the golden Fibonacci level, from the 224, I'm sorry, the 50% Fibonacci retracement or a pullback, which may complete again a higher degree, in this case 5-0 sequence again. Qualcomm, also technical double bottom, very similar as on Microsoft. No, also Microsoft, and not only. We saw another one. Which one? No, not the GP. No, let's move forward. Also with a technical, I'm sorry, a technical double bottom right there. We have the previous closes being retested and rejected at this point. We have a fractal resistance actually we have a resistance at 128.20, and we have targets for that pattern projected. It's a small move towards the 200% Fibonacci extension level, just right there. 200% Fib also as a default target, 145. It's the default target zone for that pattern. But as you can see, we are also, and for now, trading below what we may call the next zone for this heads and shoulders formation. And which means actually, I'm sorry, actually we can see these heads and shoulders like this, and this is the trend line covering the recent highs. Both things can happen, which means we may see a move to the upside with a breakout above the resistance, the price achieving the targets at 145, and then pull back again to the downside. We have targets for these head and shoulders around 61, around the $62. So I will not be surprised to see one of two, a clear move to the downside without breaking above the resistance, or a move towards the resistance and then eventual pressure to the downside. Of course, we need to wait for a violation of this fractal 156.66, which may trigger more, at least, let's say, at least a retest of this previous structural resistance, very similar as the cup that we projected for the other stocks. I will not be surprised to see that happen if the price breaks above 156.66. So this is the previous structural fractal resistance, and of course, if that happens, that will invalidate, or it starts to vanish with the possibility to give sequence to this head and shoulders formation, and of course that will increase the probability for over retest of these highs. Now I like this one. The Texas Instrument is one of my favorite stocks, together with Nvidia and Activision. One of my, let's say, the first three stocks that I started to trade, I don't know, 10 years ago, 11 years ago. That being said, it's a stock that I like to follow, and I think there's a possibility for a clear move to the upside, of course, on these stocks. I will pay attention to a clear violation of this fractal resistance, 185.99. It's my next pressure level. I believe that if the market breaks above this level, may trigger a move to the upside. I have also a crab pattern actually projected above at 211, so I just need a new higher high, and I will pay attention to this potential pressure element as potential element of resistance. So this is the bearish deep crab pattern at the golden Fibonacci extension. Let me tag this one, 210. This pattern may offer a retest of this fractal, okay, and if that fractal keeps being rejected again, that may offer a nice opportunity to go long, which means we need to wait for the formation of this crab pattern. I will not dare to short that pattern above. I'm searching for opportunities to go long, so I will wait for the pullback to the 38% Fib, and then I will work inside this range between these three Fibonacci levels to create positions to the upside, okay, between 185.54 and 170. So this will be the range to search for opportunities to the upside, and that may converge with a visit to the 200 moving average that will approach from below for sure if the market trades to the upside, forms a pattern, and then starts to pull back. So there's three steps that we need to wait: a clear violation of this fractal that should trigger positions to the upside, but then later be careful with this bearish crab pattern, the deep crab pattern, which may produce, or which may, well, the pattern will, let's put the things like this, the pattern will suggest the pullback. We don't know if that's the outcome, but that's what the pattern, if completed, will suggest. It's a retracement back to 185.54, and from here, if the price finds, again, I will use the 38% Fibonacci as a guide. If that happens, if the price finds support again at this Fibonacci level, that's a sign for a strong move to the upside, and we will pay attention to that possibility. For now, let's just observe. UROI, uranium royalty, also another price structure and another price pattern to pay attention to, or another price structure to pay attention to. I would say that a clear violation of the previous fractal, very much the same methodology. Wait for a clear violation of the fractal. That should trigger a move to the upside. We can try to take advantage of this move. This is a weekly time frame. There's a lot of territory here to take advantage. So we are talking about 22% move to the upside. So there's a lot of momentum here to try to take advantage of. But I admit, let's keep the weekly. I admit that a clear violation of this fractal will trigger a move to the upside. I will pay attention to this convergence between the golden Fibonacci extension and the golden Fibonacci retracement levels projected between 407 and 416. So this is my next pressure level for the stock. Of course, we have this bullish butterfly pattern projected to 1.25. I don't believe it can trade lower than this, but not much lower. So pay attention to this possibility. Also, the eventual formation of this bullish butterfly pattern, which may offer a move to the upside. Actually, let me adjust these Fibonacci levels to the recent lows, because if the market breaks above this fractal, as I was saying, there's no convergence between the golden Fib, but there's convergence between the 50%. That's correct. Just a small correction here. So we have convergence between not the golden Fibonacci level, but with the 50% Fibonacci retracement level between these lows and these highs, of course. As I was saying, a clear violation of this fractal may trigger this move. Of course, I will pay attention to a potential move to 125. That may offer a very interesting opportunity and risk-reward opportunity to trade to the upside if that happens. And that's what it is. I complete this video for today, and I hope you enjoy now. No, wait, there's Visa also. Yes. There's also this. I believe I shared this one before on socials for Visa. I have this on Twitter. Projected before this trend line resistance, or broken before this trend line resistance. I believe this is potential move to the upside, but as we can see at this point, we are rejecting overbought conditions. So this is not the best moment to try to get involved. Probably you need to wait for another pullback. If I need to wait for another pullback, if you don't trade this breakout to the upside, probably I will wait for a retest of a potential trend line support. Okay, I will wait for something like a pullback to the trend line. At some point, the market will be forced to trade at this trend line again, or to break it. Okay, the market may find support or break below the trend line, but you need to make your decisions. So I believe at this point, and because we are now abandoning the overbought conditions, the market may find some pressure and trade a few points lower. If that happens, I will pay attention to the reinforcement of a potential ascending structure or ascending channel and the trend line support in order to search for potential moves to the upside. But no, the main reason why I want to share this with you is because Visa is already trading above this period of consolidation guided by this trend line, so or defined by this trend line. So pay attention to more moves to the upside on this Verizon, on Visa, I'm sorry, and also this potential inverted head and shoulders, and I knew that there was something else that I want to share with you. 218 fractal resistance, we are now threatening that fractal. Attention to potential moves towards the 200% Fibonacci extension. I knew there was something else to share with you before leaving you for the weekend. And that completes the stocks approach, or my stocks approach. I hope you enjoy and take some advantage of the information that you collect here. And once again, thank you very much for being here, and I wish you all a beautiful weekend with your families and kids. And that's all for today. See you the next week.